If you are new to forex trading and you are struggling to understand where price is likely to react, then this video is for you. Today I'm going to show you how I identify my support and resistance levels, how I decide whether the level is important, and how I can use these areas to plan a trade. During this, you don't need complicated indicators. So we are going to keep it very simple and use the price chart. For the sake of clarity, I would like to speak very slow so that you get the details of whatever I say. Welcome to Akimpo FX. Let's get into it. So as I said earlier, we are going to talk about support and resistance today as a trading strategy, and that's a technical analysis, you see. So we will move on to identify or define what support and resistance levels are. I want to delay them and draw them again. So this is a support level. Let's say this is a support level. Let's draw another line over here. So you also have this line above, and we are tracing that level to as our resistance level. So support level is the one below here, this one, and this is our resistance level. So when you say a support level, what is it? A support level or support is an area on the price or area on the chart where price has previously found buying pressure and reacted upward. So this level is an area on the chart where price has previously found a buying pressure and reacted upwards. That is why I drew this. So this is our chart. A market got here, it's rejected upwards. It came here too. There's another rejection to the downside and also another rejection to the upside. So you are saying that this support level is an area on the chart where price has previously found a buying pressure and reacted upward. So market was falling, but when you go to point A, it reversed. You see, so there was a rejection over here, then it reversed. It came back again too, and we can still see a rejection to the upside. So let's you know consider this level. Let's say it's a floor of your room and you hit a ball on that floor. You will see that that ball is going to bounce, you see. So that's basically the support level. Whenever the price get there, there's a rejection to the upside. That's what a support level is. Now let's define what a resistance level is. So resistance level is basically the opposite of support. So over there too, as resistance level is going to be an area on the chart where price has previously found a selling pressure and reacted downwards. So market was here, it came here. Then market came to point point B. You see, but because there was a selling pressure over there, that area was rejected and market came back to point C. It went to point D again. That's a resistance level and it was rejected to the what? To the downside. Guys, I hope it's clear now. So now let's go to the chart and try to see whether we can identify some of these key levels. But remember, in selecting your support and resistance levels, there are major criteria or rules that you should consider in selecting these levels. You see, and one of them is that there should be multiple rejections or multiple touch or reactions. So look at this point. This particular level, our support level, you can see that price has reacted 3 times. So a reaction over here, reaction over here, the reaction to this one has to go to the upside, you see. So we have three reactions at this side or three touches. And here too, you can see multiple touches over here. You see, so that makes these areas be support and resistance levels. And what's the other criteria to look out for when you are selecting these major levels? So the other one is you look out for the major highs and lows, you see, or the swing highs and the swing lows. So looking at this chart from this part to this end, you can see something. This is a high that market created. The market came to create this low and created this high. Another lows over here, you see, and this highs too and lows. So this area is acting as a resistance level because whenever price get to this part, it is not able to break above that area. So that's our resistance area. And here too, you see that there are multiple reactions and rejections at this area. You see, so that's basically a support level. So now let's draw our levels. Now that we've been able to identify the levels, let's draw them. That is support and resistance levels. So what we are coming to do is the top-down analysis. You see, so in doing your analysis, you have to look at the bigger picture and see the details of what market is trying to do. And with that, we do it with a 4-hour time frame. So the chart you are seeing at the moment is on the 4-hour time frame. So this is the 4-hour time frame on gold. So 4-hour time frame. And after that, you move to the 1-hour time frame to refine our zones or our area. You see, and when you want to take a trade, you go to the 30 minutes, that's the lower time frames, 30 minutes, 50 minutes, or 5 minutes to look out for our confirmations. So let's draw our support level. So this is our support level and the resistance level too. From here to this side, that will be our resistance level. So this is our resistance level. You drag it to the right side. All right. So guys, you've been able to draw our support and resistance levels, and I hope it's clear now. You can see it clearly. So now what you do is you go to the 1-hour time frame, but I'm not sure that we are going to refine this area or these zones because they are very clear. Let's go to the 1-hour time frame anyway. So on the 1-hour time frame, I'm not sure I'm going to refine this area. So it's pretty cool. All right, let's look at the support level too. Okay, you will drag this one to the upside so that it covers the high. That's the rig over here. You see. So now we've gotten a perfect zone or area that we are going to plan to take our trade from. So we are considering this part from this part to the parts where the markets reacted from there. Reacted on the area again. So looking at this side, market was reacting. Then we had an upward movement. Market dropped to this part too, and it went up again. And you can see another touch over here. You see, and you can see these very bullish candles too. This is a very bullish momentum we have over here. Down to the resistance level, and another rejection all the way to this level. You see, so we are currently take a trade over here, and as you go to the 30 minutes time frame, 15 minutes or the 1 hour time frame to plan a trade over there. So let's go to the 30 minutes time frame. So the 30 minutes time frame, this is where you are trying to take a trade over here, you see. And there are candles that gives a confirmation. In the next video, we will talk about those candles. So where is the first part that market reacted from that level? You can see that over here, this candle wasn't able to touch this level. So that wasn't a good confirmation for us to enter the trade. But looking at this candle, we call this candle a bullish, a hammer. You see, this is a bullish hammer candle. So this is a hammer candle, and it's rejected that zone or that area, and that is a clear confirmation for us to take a trade over here. So what you do is that, let me explain it a little further. You can see that the lowest part that the price went to was this part. So sellers were trying to push the market lower, but as it got here, buyers came in and pushed the price higher. So markets closed over here, then they start buying. So if you wanted to take a trade, as soon as this candle closed over here, that is where you take our trade from, you see. So you pick this, and we are going long, so we are taking a buy. So you buy from this level and put your stop loss below this zone. So just below this zone, and you target 3:1 reward ratio. So let's say if you are risking about $100, you have to target, you know, $300. So that's 3:1 reward ratio. 1:3 reward ratio. So this is the target risk reward ratio. So from here, 3. Okay. So meaning that if you are risking $40 on this trade and we are winning, you are supposed to win what? $120, you see. And you can clearly see that market went straight to our TP. It tried coming down, but it couldn't get to the stop loss, and it went back to this TP. And someone would also target this level, because that's the next part that market is supposed to react, you see. But we are not assured that markets will get to that level. So you can target at least 1:3, or sometimes even if it's 1:5, so that's very cool. By taking your or setting your take profit, there are major key levels that you should try to consider in selecting that level that you take your profits from. That's your TP. So when market was coming down, you can see something over here that it created this high. You see, created this high to this high, this high, and this high. You see. So if you are taking your profit, you can decide to take it from this side. But 1:3 will be at this level. You see that we took our profit over here. Someone too will decide to take it from here or any part. But it shouldn't go above this level. You see, because it's likely that whenever price gets here, it's going to react backwards. But if price didn't get there and we have a rejection, you see, to the downside, and it's coming again. So whenever price gets to this level to you, look out for a confirmation and enter the trade. So guys, I hope you enjoyed this video. This is Akimpo FX. So I would like you to subscribe to my channel and enjoy educational videos like this all the time. So I appreciate you for joining and having time to watch this video. I'll be bringing you more forex education, chart analysis, and my journey as I continue to develop my trading skills. Thanks for watching. This is Akimpo FS, as I said earlier. and I would like you to subscribe to this channel. See you in the next video. Bye.